Hello, everyone. Absorption is a very important concept in trading, and I will show you in detail how it works. And I will give you some tips how to identify an A plus setup and how to reduce the noise. I have seen many traders, especially those who use the footprint chart, who rely too heavy on absorption, wondering why the strategy is not profitable. I will show you what they did wrong, so you can learn from it and avoid many mistakes. If you have any questions, let me know in the comments. I will read them and answer all. And if you find my video helpful, please hit the like button, it helps a lot. Thank you for your support, let's get started. You might like other of my videos about day trading. It goes from interesting tips and setups for beginners to more advanced techniques for experienced traders. And here are my playlists. Thank you very much. Now back to today's video. Well, what's the biggest issue with the absorption? It is true that you will spot absorption almost every top and bottom. And the problem is that you will see it also somewhere in the middle of the move very often. If you use only footprint, you will be not able to tell if it really is the top or bottom or just a noise or minor pullback. I will show you what I mean by that and how to approach it in a moment, but let's start with a short introduction of how to set up the filters in Bookmap and what to look for. What we see is the sweeps indicator. The sweep is an absorption over more than one price level. That means that it is a bigger and usually more important event than a simple absorption. In Bookmap, we can set the number of levels to filter out the noise. And on ES, I would recommend to go for 3 price levels. If you go for 2, the indicator will be more sensitive and will be able to spot more smaller trades, but it also increases the noise by a lot. Setting it to 4 levels would filter out many useful setups. You can also filter the size of the sweep. I would recommend to take something between 80 and 100, but it depends on the market environment. You could take bigger amount on volatile days, as the noise also increases. There are also more events on the beginning of the day than later. Let's go to auto replay. In the first minutes of the day, there are usually many sweeps on both sides and a lot of noise. You can see 2 colors of the sweeps. I have set yellow for sweeps that should mean the top, and magenta for those seen at the bottom of the move. The dots are showing the exact place of the sweep, and the numbers are amount of contracts involved in the sweep. The idea behind sweeps is that they often appear when a stop hunt is triggered. At the top, sellers are hitting their stop loss, so they are aggressively buying to cover. And the bigger players are happily selling them these contracts on the top. It can be profit taking or taking a short position before the move down. And a similar principle applies at the bottom, just in the opposite way. If you can see this activity, you can join the bigger players and benefit from it. That's the theory. Let's go for a reality check. You can see many sweeps at the open without a bigger meaning, and the first interesting one appears at the top, as we have some confluence here. You see, the retail sellers are getting wiped out, as bigger limit sell orders from bigger players are getting filled. We also see many limit sell orders sitting above, creating a resistance. And it all happened at 68.60, which was an important level in previous trading days. So with all that pieces of information, we could go short. but it happened very fast. You had only around 10 seconds to get the best price. Thereafter, many sweeps are appearing, and if you would buy on every magenta sweep, you would lose a lot of money before you finally buy the bottom. So you always need some confluence and context. You cannot trade the sweeps blindly. Later on, we get our bottom. We can see buyers are stepping in exactly at the bottom at 68.10 comes the last one sweep. The sellers are not able to push the price lower, and the trend is reversing. We go up, and you can see all those yellow sweeps on the way up. As we continue higher, we see many sweeps on the way up. Also, many magenta sweeps are appearing. This could be sign of exhaustion, and at the top could be in. We see that it really happens, but the yellow sweeps are this time not exactly at the top. Later in the day, these sweeps are not that common, and each of them could be meaningful, or at least a good scalp. In this example, we can see the price hitting a major liquidity level together with a bigger seller at the top. And we can also see this bounce coming. There is a bigger buyer, and again, two sweeps. As we get this yellow sweep, the price continues lower. In an uptrend, the magenta sweeps can show us the lowest points where the price continues to go higher. As in this case, also in this case. On the way up, you have to ignore all those yellow sweeps, as they are probably triggering the stops, the sellers, but are not causing a major pullback. Oh, in general, we can see that sweeps can help us when we have confluence with other factors, and they are more helpful in market conditions where the sweeps are rare, and when they are the same direction as the trend. We know as four signals are often significantly reducing the power of that indicator, so it cannot be used blindly, and more confirmation and context is always necessary. This is true for both sweeps and simple absorption. Ignoring the broader context is a common mistake many traders make, and it often leads to overtrading and accumulation of losses. If you find this video helpful, please hit the like button and subscribe. And if you really mean it with trading, you can join a free version of our Discord community, where I share more setups and education, and you can ask me to get my in-depth analysis on your trade or setup for free. I will choose 3 of your questions every week and give a public answer everyone can see and benefit from. Just click the link below in description. Thank you very much and see you next time.